Hey everybody, Boris. Welcome to the commodity dollar update for July 3rd to July 7th, 2017 for Aussie dollar, dollar CAD, and Kiwi dollar. And the story in the calm dollar land, of course, is that you're still getting a lot of anti-dollar flows, especially, I think the most interesting part is the unbelievable strength of dollar CAD, and we'll address that in just a second. But you're still getting the strength, I think, of carry trade flows to the Aussie and to the Kiwi, but they are, as always, much more moderate, much more tepid than the runs that you're seeing in the euro and cable. And in many ways, this week I think is going to be very interesting because, again, if we get negative US data and US yields begin to head towards that very auspicious 2% on a 10-year mark, that creates, of course, massive carry trade flows back to the Aussie and the Kiwi and puts them right back to challenging the very, very top of their ranges over long-term horizons. On the other hand, a more powerful U.S. data set really could take a little bit of profit taking in a lot of the calm dollar trades. So I'll be watching those very carefully because they are at these very, very key points as far as their top of the range levels go. Let's take a look at the calendar first. There is a little bit of data set, of course, out of the calm dollar land. On the Australian side, we have retail sales and then we have the RBA. The RBA itself, unlikely to change its posture, but certainly probably is going to maintain very much its neutral stance. Not very doubtful they will provide any kind of dovish guidance, and that should be at least at very minimum moderately supportive of the Aussie as we go forward. The other big data set, of course, is the Canadian employment data. Canadian economy has been surprisingly good. The market is looking at look at the numbers here last month, 77,000 on the full-time employment. The market is looking at a relatively decent number. Again, I guess I'm looking. I don't think we have a forecast just yet on the Canadian data set. But if we do get generally positive Canadian data set, the strength in the Canadian dollar has been so powerful because of the very hawkish posture of the Bank of Canada, essentially communicating to the market that they're willing to begin to raise rates. And I think they're worried very much about the real estate bubbles in Toronto and Vancouver that they perceive as a much greater risk to the financial health than even the potential raising of rates amidst still a generally slow recovery. So be watching this the Canadian dollars very, very carefully on the employment data. If that comes in strong, it should only provide more fuel for the caddy. Looking at the levels here, the levels are very interesting. So we're coming up against very long-term resistance in the Aussie. This is why I say, in many ways, it's kind of a pivot week. If the U.S. data is really horrible, we may be able to break these very high resistance levels. For dollar CAD, we've already broken the very key 130 resistance level, and now we're coming up to the 127, and ultimately the really, really big support level of 125. So those very much come into view. And Kiwi also showing a little bit of power, and now coming up against that 75 level, which is very, very critical. So let's just take a look at the charts here. Let's look at the Aussie. Here's the Aussie, and again, this is the weekly chart, and that gives you a lot more information as to where we see the big resistance point. You see this whole 77, effectively 77, 50, 78. That is a 1, 2, 3, 4, 5 quadruple top, quintuple top formation, and that's where I'm talking about, where this whole big long-term range high comes into play. So the conventional view here is that yes, this is going to be a big resistance point, and it's going to be very hard to overcome. If the U.S. data is truly horrid and U.S. yields start to compress towards the 2% level, it's not at all inconceivable for us to break it. And if we do break it, then it really opens up the whole 80 possibility in Aussie dollar on pure carry trade flows. On the Kiwi side, similar kind of a story. This is, again, a weekly chart where it gives us a lot more information. And you can see that the 73, 75 is the absolute pinnacle of this particular range. We got very quickly rejected off the 75, but now a very strong formation. By the way, looking at the weekly chart, just look at the power of this weekly move. 1, 2, 3, 4, 5, 6, 7 consecutive weeks of up moves. Another, reason, if you're getting contrarian, why there's potential here for reversal, because generally 7 weeks of up moves provide very high probability of at least a pause and a reversal in the move. I think the possibility the U.S. data will be okay is more than 50-50. And if the US data shows just a modicum of strength, it does provide a little bit of profit-taking opportunity. I think you can see Kiwi back down to 72s and Aussie right back down to 75s if we get US yields starting to pick up. On the other hand, if it fails, yes, this is gonna squeeze a lot of shorts right up to the 75 level. Last but not least, of course, is the CAD. CAD benefiting tremendously from the bounce back in the oil, in conjunction with the fact that the BOC now is much more hawkish. So you see this very powerful weekly candle closing at the lows. This is a very, very bullish move here. Now, it doesn't mean that the CAD generally could follow through the next week, but it does suggest, I think, that a long-term move here, very much to the downside on the CAD. We had a big, big distribution here at the 136 level. The false breakout to the upside now caught a lot of the dollar CAD longs and trapped them. And they're just getting slaughtered here as the pressure to the downside continues. The big support here is 127, and then the ultimate support is 125, 24, 25, somewhere around there. Given the power that we've had here in the Canadian dollar, I think it's reasonable for us to maybe see 127 this week. It seems to be the relative outperformer, especially if we get any further uptick in oil. If oil goes to 48, 49, this just provides so much fuel for CAD to go down to 20, 28, 27, that you got to take a strong bet on the short side for dollar CAD. Wish you guys the best luck, the best of trading. Boris, over and out.